This is Eric Muadha with Muadha.com. It is September the 2nd, 2011, and we see the Dow closed down for the day this Friday, down about 253 points, and we see that the Nasdaq closed down about 2.58%, and the S&P 500 closed down about 2.5% for the day. That's how it looked like. Not a big surprise. If you were reading the charts correct over the last 2-3 days, you saw this reversal coming. I think more importantly, and what is really kind of like an confusing market, because at the end of the day of this week, at the end of the week, we see that the Dow is now closed in the negative, and this is a Dow Jones 2-year weekly chart. We see that we ended the week down 44 points. So early in the week, we had been trading close to these moving averages here, the 10-week moving average, and we stalled right there on Q. Now, I want to share with you like what I was, like I said, some of us had seen this coming, this reversal coming in the market. Yesterday in the morning when the market was up about 20 points, Dow was trading at 11,632. I posted on Twitter that I thought that seems like close to the highs for the September of 2011, and since then we've been down about 400 points, give or take. And the reason why I posted those comments is, and I made a video. You can log in to check the video and why I thought the market was just itching to go lower, which it did over the last 2 days. No surprise there, including yesterday's reversal. Again, which brought the Dow to a negative close for the week. Now, I think one of the charts that illustrates exactly what happened this week is the Nasdaq 1-year daily. If you take a look at the Nasdaq 1-year daily, it's very obvious that you see that this yellow shaded area here, which was a breakout in December of 2010. Once the market broke out, we had a nice move here. Market came and bounced off that level once, went to new highs, came back, bounced off this level again, went to new highs, came back right here, was a pivotal point, did not find support, and broke down. And now we've worked our way back over the last couple of weeks to that exact point, and we've bounced off it to the downside. And this chart explains exactly why the market was down over the last 2 days. Just because now what was support has turned into, and what was the floor for the market has now become a roof. The market can't seem to move above that. Same scenario, if you take a look at the QQQ, again, this yellow shaded area was support going back many months. And again, I said as long as we remain above this yellow shaded area, we should look at the market from a positive perspective. But now we are back below this yellow shaded area right there. Also don't forget that we bounced exactly as we had talked about. The market would find natural resistance around the 50-day moving average and the 200-day moving average, which is now flattening out. What that says is that this is a market where you want to be very wary of any breakouts, because they could just be traps. Okay? Of any breakouts of market trying to move high, because they could be traps. And these moving averages here, it seems to me there will be resistance, and that has become resistance over the last 2 days. Now we are back below the shaded area. We are going to default to a market that wants to go down. Doesn't mean that we have to be down on Tuesday. It just means that the market is setting up to test these lows here it made in August. I am of the view that it's going to break those lows, but right now I'm going to just go with the test of these lows, but I think it's going to ultimately break those lows of August 2011. Now, take a look again at the same chart. This is a QQQ daily chart, and you'll notice that right here on the RSI, if you draw a straight line connecting that high and that high, you end up with exactly where the market stalled. Right there is where the market hit resistance yesterday, or I think Wednesday, and since then it's rolled over. And then again, we did see the market moved below 50 today, and that's the reason why the QQQ was down and the market was down a significant amount. Like I was saying yesterday, this chart here is a QQQ 1 year daily. The previous chart was the today's trading. This is yesterday's close, and as you can see on yesterday's close on the RSI, you'll see that it closed exactly at resistance yesterday. So if you saw this towards the end of yesterday or yesterday at some point like we did, you could have been aware that the market was going to have negative day today, or at least the possibility was very high of a negative day today. Now, yesterday we closed at 51.58 on the RSI right there, and today we closed at 40. Let me get that straight. Let me get the right chart. And today we closed at 40, almost 47. So that move below 50 is the reason why the market was down a lot. Now this is the IYR, and this is a 1 year daily for the real estate complex here, the ETF that tracks the real estate sector. Now you'll notice on the 200-day moving average, first and foremost, we have a slanting lower 50-day moving average, and then we have a 200-day moving average which is flattening out. Now what that tells me, after you've had this big run up, now you're flattening out, is probably now you want to go lower. All right, and the only way that happens, the only way this instrument moves lower is if prices move down over time. Now notice yesterday at the highs of the day, where we called for a reversal, the market hit that level right there and backed off. Now, you'll also notice that as of yesterday's close, this chart is yesterday's close, Thursday, the RSI was at 50.24. Okay? So you knew that slashing below 50 would bring a big down day, which is what exactly happened today. Today, the same chart, but with today's market reflected, you'll see that the RSI is now at about 46. Hence, it was down about 2.42%. It's a big move for this instrument. So, again, I think eventually this market takes out these lows it made in August. These lows are now under threat, given what I see. Let's take a look at the banking index as observed by the BKX. This is a 1 year daily. And I'm going to bring your attention to the RSI on the daily. You will notice if you take the highs of 2011, the highs of July, and yesterday or about 2 days ago, we hit that level, that line right there. Once we hit that level, we're either going to break out or stall. And of course, the market chose to stall, and that's why the market's been down the last 2 days, and in fact, why it's down for the week. It's not as complicated sometimes as it might seem. Dow Transports, again, the same scenario as the NASDAQ. The yellow shaded area is where the market has been finding bullish scenarios. Once it was above that, market kept moving higher. But since August, we've been down below this yellow shaded area. And what we've done over the last day or two, over the last couple of weeks actually, we've come back and we come back to this resistance level here. As of yesterday's high, we hit that level, kissed it, and now we are moving lower. And as I say, this makes me believe that we are going to take out these August lows. Okay? Unless the charts change, that's what's looking like to me. Now this is the Dow Transports from a 4-year weekly chart. Again, we closed negative for the week. All right? We closed negative for the week. And I think I want to show this chart because I don't see anything in this chart that tells me this market is ready to move higher. Seems to me like it's still under pressure. The MACDs have never really looked like, especially the main MACD here, seems like it has never found any reason for anybody to believe any rally has legs for now. Now let's take a look at the S&P 500, and again, same scenario pretty much ever since we formed this, and this is an S&P 500 3-year weekly chart. And what you see here is ever since we had this huge head and shoulders formation, as you can see right there, the head and shoulders formation, which is a bearish signal, market's been down. And if you take this red line here, which I draw It's an area where once the market broke out late last year, we had a nice move. Then we came back, unfortunately. Well, if you didn't see it coming, we broke down right there. We broke down this red line due to support, broke down there, and we've been down in August, tried to rally, and as of yesterday's high in the morning, we hit that level and we've since backed off, closing negative for the week. All right, I'm going to pause the video there. So that's the end of the free part of this video. If you want to watch the rest of the video, log on to www.wale.com.